Another reason that some of you traders keep losing accounts is because you think that consistency is when you win every trade, whereas in true reality, consistency is being profitable even after taking certain losses, right? I'll make an example. Look at this. So this is just a straight line. It has just the beginning and the end. So you can't say it's consistent. It's just linear. But looking at this zigzag pattern going up, this is a pattern, and there is consistency in this pattern. What's that consistency? You have that push and that pullback, that push and that pullback, that push and that pullback. So overall, this push and pullback is giving you a bullish trend, which then suggests there is you do get to win and you lose, but overall you are going up, right? So maybe just to try and put it in numbers, say you have an account of $100. You have an account of $100, and this is the only account you have, and you're trying to grow it. How can you grow it without having to blow it? Say for every trade that you are taking, you are going to risk $10, and for every $10 that you risk, you are targeting to make $50. Right? It's quite a good number. It's a 1:5 ratio. So it means for every $10 that you're risking, you are going to make $50. So now, let's say you have a good month, or you have a good week, or whatever reason is. Let's say you happen to win 10 trades in a row. You win 10 trades. Okay, maybe not in a row, but let's say you win 10 trades overall. When you win these 10 trades, it means you would have made, if you won these 10 trades looking at that $50 target, you would have made about $500 profit, right? But what if you also lost another 10 trades? So let's say you also lost 10 trades. So it would mean you had a loss of $100. So now it means you didn't lose. Yes, you took 10 losses and you won 10 trades, but overall you were profitable because $500 minus the 100 that you lost, that would put you on $400 in profit. Mind you, that account that you funded was just $100, and after winning just 10 trades and losing just 10 trades, you made $400 in profit. But that's not everything. To understand better what I'm talking about, let's go to my MetaTrader account so that I can further explain. If you're still watching the video, thank you so much. It says you're enjoying the content and you're finding value from it. So please do give it a like, leave a comment, say something nice, anything productive, what to improve, what can I do better, or whatever. Any comment that is very nice to encourage me also. Also share the link with your friends. So going on, now we are on my TradingView account. So don't mind what's currently in front of us. We're just going to go all the way back because I believe that's where we're going to find the best example for this particular video. So I want to preach to you guys that consistency is not winning every trade, but consistency is being profitable even after taking many losses, right? So pay attention to how I trade my markets. Now, if you want to know how I trade using these zones over here in the trend lines, I do have videos on those ones. After just watching this video, you can go on and check them. So say you were trading this market with me, right? The market dropped very heavy. We remember that was, I think it was CPI or something. I don't remember clearly. And then it went up. So immediately when the market suddenly decides that it's going to reject at this area, for me it suggests that there is a strong area of resistance from there, and so I should be careful. I need to look out for that. Then the market further drops down and suddenly it doesn't reach the low that it did before. It stops at this area. So when the market normally does that, it says there is either a channel or a trend that is currently happening, right? Others would say it's a retest, others would call it a correction, but for me it means there's a smaller trend that is going to form, right? So then I would look at this as my first low and look at this as my second low, and I would wait for the market to come for the third time, right? Well, so when it came here for the third time, as you can see, I bought at this area. Look how when it came for the third time, I did exactly the same thing. I sold. When I sold here, I was supposed to have opened another buy at this area, but I didn't. I don't know why, but it's fine. So when the market went up, it came again, it's a re-entry, buy again, sell, and then I bought again at this area. That's when I took my first loss. I thought it was going to maybe now buy at this support over here. I took another loss. So just watching, observing what I just shown you guys is that there is consistency in my trading. What do I mean by that? I don't change my strategy. If I say I'm going to buy on support, I buy on support. If I say I'm going to sell at resistance, I'm going to sell when it gets to my resistance. So now I know people who will change strategies only because they just lost 2 trades, or they blew their account, and they feel that, you know what, next time I'm not going to trade using this particular strategy. All of a sudden now they want to go and learn about moving averages, or they want to learn about RSI, or they want to learn about systems and robots. Look, every strategy works. You need to keep this at the back of your head. Every strategy works. It's only when you do it consistently. Remember, you can't lose every time. If suddenly today I woke up and I decided, you know what, for the rest of the week I was just gonna buy this market. It gets here and I say buy, I won. I say buy, I lost. I say buy, I won. I say buy, I lost. I say buy, I won. I say buy, I lost. I say buy, I won. So you know what I'm trying to show you with this one is that look at how small my losses are if I lose. I have my stop loss so tight and my take profit a bit further up. So it's a risk to reward of 1:5. So let's say I lost that 10 and I won that 50. I lost that 10 and I won that 50. Lost that 10 and I won that 50. Lost that 10 and I won that 50. There is consistency in my strategy. So rule number 1, if you want to achieve consistency, you need to have proper strategy that you have back tested and you're comfortable with, and you're willing to trade it without changing it, and accept that there will be losses, and accept that losses are part of the game. Rule number 2, you need to have a fixed stop loss. So I know people who one time they want to have a stop loss so tight like this, the next thing their stop loss drag like that, right? I don't understand, because on this trade you're gonna lose a cent, and on that trade you're gonna lose $100, on this trade you're gonna lose $40, and that's not being consistent. That is why sometimes you might lose only 2 trades and blow your account, because you don't understand that every pip counts. So if you're going to lose more than you are comfortable to lose, it's going to mess with your psychology, it's going to mess with your emotions, which is leading us to our third point. Number 3, if you want to achieve consistency, you need to practice to be calm. You need to practice at the moment you open a trade, you need to accept in your heart that I've lost that amount of money. Remember, personally, when I open a trade, let's say I have an account of $100, I'm willing to lose $10 on that particular trade, right? Immediately the moment I open that buy or that sell, I've already accepted in my heart, you know what, I no longer have $10 in my account. What does it do to my psychology? It then makes it easy for me to let the market play, or any setup just to play, because remember, I don't know where it could go. It could go for me or go against me. So if I'm not comfortable to lose that money, I'm just going to be a chart zombie. I'll be on my charts worried what's going to happen. But if I let the market run, because I've already accepted that I've lost certain amount of money, then the market gets the time freely to move, because I'm not now panicking, closing early. I think you get the picture, but you need to be comfortable. Identify the amount of money you're comfortable to lose, and the moment you open a trade, accept that you've already lost that amount. There's many tips on how to achieve consistency, but I believe that these are 3 best pro tips. You need to have a strategy. Don't switch between strategies. Stick to one strategy. You need to have a proper risk management. Your stop losses need to be fixed, and you need to know your psychology, right? You need to have your emotions in check and understand that in trading you will take losses. Be comfortable with that. Just make sure when you get the losses, you cut them early, and when you take the profit, you let it run for a long time. I hope this video was useful. I'm recording it such a very, very, very stressful condition right now, but I hope I was able to bring value to you guys. I hope you enjoy. I hope this video is going to help the next person to get their first dollar. Let's get this money, man.